Lately, Bitcoin has been hitting headlines again after making a comeback in its value from the cryptocurrency crash of 2017. After a quick 80% drop, it only took the last 9 months to climb to a new record high of today. This time, the rally seems a bit different, as there's not as much craze around Bitcoin, and a lot of people have already lost trust in cryptocurrencies after the last time. So in this video, I'm going to talk about the reasons why there's a comeback. Then I'm going to try and make sense of its value by comparing its size to major outlets like tech, gold, money supply, and the GDP of entire countries. Then I'll introduce my preferred ways to invest in Bitcoin. So the Bitcoin comeback is likely based on 3 reasons. First, there's so much money printing around the world by central banks that people and investment firms are starting to question the value of money. Given that central banks around the world, especially those in developed countries, have unlimited ink, they only have to print amounts relative to what the neighbor countries are printing, without sounding like they're overly excessive or drastically affecting foreign exchange rates. As investors are becoming more comfortable with cryptocurrency, we see people selling out of gold and other precious metals in exchange for Bitcoin and other cryptocurrencies. Given the similar dynamics of protecting against inflation and excessive printing, there's more upside and possibilities through crypto, without the expensive costs of storage and delivery. Second, there's a rarity and real lack of supply of Bitcoin, making it seem like a scarce resource and people are attributing a higher value to it. But like gold, on Earth there's a finite amount of resources that can be mined. In Bitcoin's case, there's a total of 21 million Bitcoins, and as of today, 18 million have been mined. That's 88% of the total. But from a mining perspective, and without being too technical, the reward of mining becomes more difficult every following year. Every 4 years, miners will only be able to mine half the amount they did in the prior 4 years. This half-life Bitcoin mining will likely keep going on until the year 2140, but for the next 120 years, only the next decade would be the most important from a supply and demand perspective. This is because the next 8 years covers the majority of the remained unmined Bitcoin. Lastly, crypto is becoming increasingly prevalent. Leading-edge technology or fintech companies are incorporating crypto into their operations, and end users are becoming more familiar with it. For instance, Square's Cash App and PayPal's Venmo, according to reports, are in a race to acquire enough Bitcoin to facilitate the next generation of money transferring services. They both hope to allow their massive user bases to transact with merchants in Bitcoin and move currencies back and forth. Overall, I like to think of the crypto era like the internet boom of the year 2000s. At first, people were just pushing up the value of technology stocks without really understanding what they did, or without seeing any major impacts on the global population. With it being overvalued and there being a lack of results to follow, the tech bubble popped. But following the decades after, when people became more comfortable with the internet and it became essential to the world, the valuation started to align with results. Bitcoin may be following a similar cycle, where the first run-up with its value was out of pure speculation, but after the bubble popped, the next run-up may be because of the increasing proof that it's playing a bigger part in the world. So let's talk about Bitcoin's market valuation. So I was thinking about the different ways that you can compare the value of Bitcoin, since that would be the best way to measure its size. So I created a table that shows the market value of all Bitcoin today, which is 440 billion. I used that value and compared it to Ethereum, the second biggest cryptocurrency, highly valued tech companies like Tesla and Amazon, the entire Nasdaq 100 index's market value, which is 100 of the largest and fastest growing companies today, traditional money measures like gold and silver, the total money supply for the US dollar, Chinese yuan, euro, and Japanese yen, which are the world's 4 largest currencies, as well as the GDP of the top 20 largest nations. In case you want a copy of the data and keep tabs on the value of Bitcoin updating, you can see my Google link sheet in the description. So here are my observations on Bitcoin's value. When compared to Ethereum, Bitcoin is roughly 6 times its size. When put against the largest tech companies like Tesla, Amazon, Google, Facebook, Apple, and Microsoft, it can range from 20 to 70%, 70% being up to Tesla and 20% being the value of Apple. When comparing against the entire Nasdaq 100 index, which again is 100 of the largest and fastest growing companies today, and includes all the big tech companies I've just mentioned, Bitcoin's value is 2.5% of the total size. Bitcoin's size, if it were a company, would make it the 8th largest company in the Nasdaq 100 and the 10th largest company in the world. Against the total gold and silver mined around the world throughout history, Bitcoin's value is roughly 3.5% of gold and 30% of silver. So Bitcoin is still pretty far away from overtaking gold, but it's gone to where it is pretty fast. To match gold in the next decade, Bitcoin at its expected mine life cycle would need a coin price of roughly 610,000. For money supply, there are various measures, but I used M2, which is the value of money in existence if everyone pulled their cash under their mattresses, withdrew from the banks today, both which should represent M1, but then had some extra time to cash out from their savings accounts and mutual funds. Against money supply, Bitcoin's value is roughly 1.5% of the Chinese yuan, 2.3% of the US dollar, 2.8% of the euro, and 3.2% of the Japanese yen. When combining all four currencies, Bitcoin's value represents almost 0.5% of the size. So overall, there's still a long way to go before Bitcoin actually replaces current money. But I think this observation is pretty significant. If Bitcoin's market value grew by 33 times in size from where it is today, or a price of $775,000, and it could manage to hold these levels, then I think it could theoretically be large enough to compete against an entire major currency. But maybe you don't need that much money supply of Bitcoin, you just need enough people transacting with it to be significant enough. So let's see how much the value of all transactions are for Bitcoin versus whole countries. When comparing Bitcoin to the GDP of the top 20 largest countries around the world, we have to make the comparison more similar. GDP, for those that don't know, basically represents the market value of all finished goods and services produced within a country over the course of a year. Since GDP only measures a country's economic production for 1 year, I made the comparison by seeing all value of transactions made using Bitcoin. Bitcoin's transaction value during the year of 2020 was $570 billion, or $1.5 billion per day. This reflects all the changes in its price throughout the course of the year. So when compared to the GDP of the world's largest economies, Bitcoin's size is compared to around 3% of the US GDP, 4% of China's, 11% of Japan's, and 15% of Germany's, to name a few. As we go down the list of the top largest countries, you'll find that Bitcoin is pretty big. For instance, it's 20% of the UK's GDP, 33% of Canada's, and almost 47% of Mexico's. Overall, Bitcoin's value is pretty significant compared to the economic value produced in a year by countries, and it's gotten a lot closer over time. Simply doubling the value of Bitcoin transactions, which is $1 trillion or $3 billion per day, would already make it larger than many of the world's largest economies. But at the end, it's still far away from overtaking the largest economies. Interestingly, I noticed since the beginning of November, Bitcoin transactions have started to go roughly $3 billion per day compared to the roughly $1.5 billion per day in prior months. So let's talk about the different ways to easily invest in Bitcoin. You could create a digital wallet online to directly buy Bitcoin, invest in a Bitcoin fund like Grayscale, that's a high fee fund holding Bitcoin, or invest in the stock of companies involved with Bitcoin. But when it comes down to it, I think the most strategic way to go about it would be to invest in the platforms that allow for crypto transactions. Like the gold rush concept, most people rushing to mine for gold ended up broke and unsuccessful. Of course, the few individuals who struck gold fast and early became rich, but the most successful group were the people who sold the tools to the gold miners. In many cases, the people who sold tools became richer than the people who struck gold. For Bitcoin, I think either Square's Cash App, PayPal's Venmo, or Coinbase would be the best candidates as the sellers of tools for Bitcoin miners. Today, Square's Cash App offers users banking services like direct deposits, debit cards, ATM access, a platform to invest in stocks and Bitcoin, and integration with Square sellers. In the future, Cash App will also likely offer a range of traditional banking services like personal loans, credit cards, mortgages, and insurance. The difference is that Square will have a more personalized user experience at a much lower cost than traditional banks. Adding to this, Square can incorporate the digital wallet to its seller ecosystem to accelerate and raise the value of transactions on its platform. Without taking the risk of owning every Bitcoin in sight, Square can make more money by charging fees for Bitcoin transactions made on its platform. I can't say what the value of Bitcoin will be tomorrow or next year, but I definitely expect more transaction volumes going into the future, and Square can be expected to charge good fees for each purchase and sale on their platform. To illustrate how large the platform has become, Square's Cash App and PayPal's Venmo have both gone to 60 million users in the last 7 and 10 years respectively. That's a milestone that took JP Morgan 30 years and 5 mega-sized acquisitions to reach. Likewise, PayPal's Venmo is the largest peer-to-peer payment application and digital wallet in the US. Venmo enables anyone with a mobile device to send and receive payments by text messages, creating a dialogue between buyers and sellers, make and share payments, connect with people, send money for free, and cash out to any bank overnight. Essentially, Venmo makes money by charging fees for transactions and transfers. As Venmo plans to heighten the use of Bitcoin transactions on its platform, we can expect more fees to be collected for the volume of financial activities it processes. Coinbase, which is still private but recently filed for an IPO, is the largest and most valuable American cryptocurrency company. They make it easy for people to buy and sell Bitcoin and other digital tokens. You can think of them as a crypto stock exchange. The firm takes a fee for each time a customer places an order. When the company last raised private funding in 2018, it was valued at $8 billion. Alternatively, a more defensive and indirect way to invest would be in fintech or financial technology ETFs. These funds invest in tech companies that have products and services that can potentially change the way the financial sector works. My personal go-to fintech ETF is the ARK Fintech Innovation ETF, ARKF. The fund has $670 million in assets, and it's fairly new with its inception in 2019. Inside the portfolio, there are 50 stocks with Square as a top position at 12% of the fund, and the remaining names are all of large sizes, mostly over $10 billion in market cap. Based on ARK's research, in the US, digital wallets could be valued at $800 billion by 2024. That's 27 times the $29.5 billion today. With this fact alone, this suggests that the fintech name selected by ARK will likely have a bias towards those transacting with Bitcoin or other cryptocurrency. So that's all for now. If you enjoyed this video or some of my observations, remember to like, subscribe, and turn on the notifications for more money-making ideas in the future. Let me know in the comments below your thoughts on Bitcoin and whether you're investing in the space already, and I'll see you next time.